Hi, I'm Sarah, a research analyst at Angel Publishing, one of the largest investment research firms in the world with over 500,000 followers. Today, I'd like to talk to you about 3 specialty REITs to buy now. So, what makes them so special? They're not traditional REITs that are heavily invested in commercial office space, which is a very dangerous place to be right now. Yet they still offer incredibly high yields, often many times higher than office REITs with some yields as high as 9% or more. All without the risk you're seeing right now in the ongoing collapse in office space where vacancy rates are as high as 25% and commercial real estate is losing value fast. The first is Innovative Industrial Properties, Inc., a REIT that specializes in leasing industrial properties to medical use cannabis companies. Because whether you agree with it or not, the green gold rush is real, especially here in North America, where marijuana is legal in Mexico and Canada and is growing like weed here in the United States. It all adds up to one thing: big money. What I like about this company, though, is that it doesn't grow a single leaf. What it does do is provide space for it. I'm talking about huge industrial warehouses where cannabis companies grow and distribute it. That's where this one firm has established a stranglehold on the entire market by owning over 4.5 million square feet of rentable space for producing medical marijuana. That keeps the checks coming in year after year no matter what happens, since this 99.2% of the space is already leased out. The best part is they don't even have to pay any expenses related to these properties either, so their expenses are as small as it gets. Energy bills, insurance, repairs, and maintenance are all covered by the tenants, which means all this cash cow has to do is sit back and pile up the cash. As for the dividend, it currently pays out a hefty 7.75%, while shares have rallied up as high as 33%. The second is Omega Healthcare Advisor, a healthcare REIT that provides capital and leasing to 893 assisted living facilities in 42 states and the UK. This one is practically bulletproof as it cashes in on the silver tsunami that's literally growing every day as 80 million boomers continue to age. That means one thing: big business for nursing homes, since there is a 70% chance all of them will end up in a nursing home someday. The thing is, there's not enough space, not by a long shot. So 3,000 new nursing homes will need to be built just to keep up with demand. And OHI is sitting at the catbird seat. With 84,718 beds and growing, this specialty REIT is rewarding investors with an 8.75% yield. As for the third, it's an ingenious way to cash in on one of the fastest growing markets in the world today: electric vehicles. Best of all, you don't need to own an electric car or know anything about EVs to cash in. Because thanks to an obscure direction in the 2022 Inflation Reduction Act, this REIT unlocks a new income stream that lets everyday Americans skim off a portion of the fees every time an electric vehicle plugs in to charge on their network. I couldn't believe it either, but it's true. And I don't have to tell you how fast this market is growing. Now, the feds are targeting a 10-fold increase in EV infrastructure before 2030, meaning 450,000 new EV charging stations will be printing money day and night. And for good reason. By 2030, the number of electric cars on the road is forecasted to grow 15 times, handing special companies like these 15 times more charging business, and you up to 15 times more payouts. Because the way the special entities that operate these charging stations are structured, they're now obligated by law to share their profits with ordinary Americans like you. I call them plug-in payouts, and all the details can be found right here or in the description below. But don't wait. Shares are already up over 18% in the last 2 months, which isn't surprising since it pays a rather large 9.8% yield. Until next time, I'm Sarah. Thanks again for tuning in.